right, let's get started. Now, CPI came out, and we haven't really seen any of a market reaction from it, which is somewhat odd because I was more so anticipating that we should be accelerating to new highs here. Now, even if it's not going higher at the moment in short notice, what you need to be paying attention to is the WIX, where you can see the number is now below 17 now. And if you pay attention here, number 17 has been like the floor in the market for WIX. Now, if you don't understand the relationship between WIX and S&P 500, anytime WIX goes down, S&P 500 goes up, or like other stocks go up. All right, so we opened a long portfolio when VIX was like touching 60, and I was basically anticipating that the entire VIX is going to get crushed, and that's the crush which is happening right now. Now, we had a very pivotal moment due to CPI that S&P 500 basically, VIX basically went below 17, and that is going to bring in new sorts of liquidity in the market, because this chop over here was essentially what was keeping S&P 500 in like this very tight range. So if you remember, we were discussing this pattern, which is this consolidation pattern of an ascending triangle from down here, and you connect it like that. Now, the breakout from this triangle hasn't been a strong one. It's just like, casually just walking out of it, but just telling you that, there's underlying buying pressure in it. But the market seems to be waiting for some kind of a news event in order to like really start going. I was thinking in my mind the CPI would be that news event which would make it start going, but apparently that's not the one. What also needs to be paid attention to is that just because you are moving in a lethargic manner, it doesn't mean that the market is going to run out of steam, or that it's going to like start going down, that this is going to be some kind of a top. That's a very common misconception in the market, because what you need to be paying attention to is that we have barely started expanding on the 2-week candle. So if you look at every 2-week candle size which has been printed from this bottom, the next 2-week candle has been bigger than the previous one so far. So if there is going to be any kind of a top which will be printed in the market, that will only happen after we have made all-time highs. It's not going to happen before we print all-time highs. And secondly, it's not going to be as like, okay, I just printed the all-time highs, now I got to collapse all of a sudden. Like that's the fear mindset which kind of like, kicks in, because things have been going up for like quite some time now, and we start imagining that the market is going to hit that one level and it will just like reverse, and all my positions are going to go to zero. That's not how tops get printed, first of all. Second of all, if a top will get printed, you will have plenty of sideways action, which will sort of look like this. So let's say the market was like unfolding higher. Like you can see that the strength was very prevalent in the market. And if that was going to be some kind of a top in the market, what's going to happen over here is that it's going to go sideways first. Or so that's the sideways price action. Okay. Where you can see that there's a visible swing high on the daily chart, but there's a rejection. The market goes back and forth, testing that rejection. And then eventually there's a key event which comes into the market, like the FOMC event or the CPI event or the NFP event, which causes a massive breakdown in the market. And those key events are responsible for causing tops in the market all the time. It's never like, some random headline is going to like make a top in the market. At least when it's trending higher, that's never the case. It always happens around key events. Like when this drop happened, it was because of the FOMC meeting, which happened on Wednesday. Like December 18th, Wednesday, was the FOMC meeting day. Okay, so that, which is one of the reasons money discusses the 6-week cycles, where the 6 week cycle starts at the advent of an FOMC meeting and it goes to the next FOMC meeting. And in this case, the new 6 week cycle was kicking bearish because we had a bearish reaction to the FOMC meeting. Now, in our case, where we are here right now, just because we're going slow, it doesn't quite mean that the market's going to top over here. Especially when the WIX is like trading below 17, that there's more downside in the WIX now. So the WIX can go to like at least 11. And if it goes to 11, you have much, much further upside in the market, at least in S&P 500. Now, the other news event which the market might be waiting on is the US-China trade deal, because there were trade talks which happened between the US counterparts and the Chinese counterparts. The finalization of the trade deal hasn't been announced yet. So my thinking is that when they announce that the trade deal is finalized, or whatever framework they discussed on, it gets approved by their respective leaders, that would be one of the catalysts for the market to actually start going higher again. And that may be presenting an opportunity for the market to print new all-time highs. Now for us, we are kind of cozy in our long positions, where we entered the long position last week on Thursday during this drop, and I've just been holding it. I haven't been doing anything. Even if you look at the daily lows, which have been printed every day since then, the market has just been printing higher lows on the daily and it's going higher. The only difference might be that you're not pushing on the expansion phase as every daily candle is expanding. But if you look at it on a daily basis, how the market is going, it is breaking the previous daily's high, it's making a higher high, and it's making higher daily lows. Now, even if at some point the market does give you like a down day, it doesn't quite mean that you just stop yourself out of the position. What's going to happen is that if you do get a down day, one of these daily lows might get taken out. But the key daily low, which is down here, where our stop loss is sitting at 59.20, that's going to remain intact. So whatever the next flush is going to be to the downside, that will be just an opportunity to buy the dip and take it all the way to all-time highs from there. Now, from this point onwards, till whenever June month is going to come to an end, we will be making an all-time high. I don't think that's a dispute I would be picking up at the market. What may happen is that it will be like a slow churn grind up while we go to all-time highs, because I think everybody's always like, anticipating that it's going to be like a hurrah kind of a phase, because the market has been like, kind of unfolding in a very vertical fashion. What you also do need to realize is that we are almost up 26% from the lows. Okay. And that happened in 60 days. Generally speaking, in order to carry out 26% rally in a regular market, like let's say this was when the year opened in 2024, January low, pay attention on how long it took to carry out 26% rally. 294 days. We did 294 days worth of movement in 63 days. So don't be too fussy about the fact that the market is taking 2 or 3 more extra days to get till all-time highs. I know that all-time highs is the draw in the market. If it's taking like a week extra or 2 weeks extra, that's still quite okay. Because in the grand scheme of things on how long it is taking to get till there, it's still a very, very fast ride up. It's much better than waiting 290 days to carry out like a 26% return. So that is like a quick update on S&P 500. The other one which I have been like positioned long on is Bitcoin longs. We took the Bitcoin longs at the bottom, and this week definitely saw an explosion in Bitcoin market, which happened on Monday. Now for the past 2 days, price is consolidating and it's basically making an inside daily candle, where it's not just an inside daily candle now, it's actually going to be confirming a double inside daily candle, which is signaling some extreme consolidation in the market. Now, double inside daily candles in an uptrend, whenever they form, it almost always leads to a breakout. And my thinking is that the market is just going sideways, gathering energy so that it can like make the final attempt to new all-time highs, which is our target. Now, the moment new all-time highs get tagged at 112,000, we will be closing along positions. And if you remember from our weekend live stream, I did mention that it's very, very unlikely that this resistance zone is going to hold, which means that when the market starts pushing, you will be punching above that resistance zone. Now, guess what? Because the resistance zone got flipped, this is now a support zone. It's an SR flip. So, which is one of the reasons that when we went down yesterday, this area was holding a support, and we saw like a pretty decent push up from there. Now, on the lower time frames, like how I'm mentioning, like a double inside daily candle, that almost always translates to a bullish triangle being printed on lower time frames. So you could probably call this like a bullish pennant, where there is consolidation happening in the bullish pennant, and going into the weekend, like on Thursday or Friday, going into tomorrow, it will most likely attempt to break out from this bullish pennant and make its way to 112K. Okay, so that's a quick update on Bitcoin. The other one which I have been looking at is Ethereum, where it almost always, no, what I mean is that it pretty much followed the plan I had in mind, where initially I was leaning bearish because of this particular pattern, which is the inside weekly candle failure, and we took out the inside weekly candle lows. But I specifically mentioned during the live stream that if we do go higher, this is the max that can go higher, like 2580. If it were to flip this resistance zone, that would be a break in market structure to the bullish side. And the moment this break in market structure happened, guess what? It turned bullish. It attacked this resistance zone, which is the fourth attempt. That resistance zone has already tested too many times. It broke past it. And now we are well on our way to 3100, 3200 target, which is the high time frame target we had in mind for Ethereum during this entire bull phase, as it's been like going higher. I did want to buy the dip down to 2150. We did not get that, which is one of the reasons you need to be flexible with your mindset that where exactly is the local resistance. Because if the local resistance flips, then there is no reason for the market to keep going down again. And we did flip the local resistance on Monday when Bitcoin also pushed. And that was the trigger to go along. And I think it's very much on its way to 3200 now, where this resistance zone is a support zone now. So you need to flip that. And more so, we have also flipped this resistance zone over here, which the market was like holding for some time. Now from here, which is 2850 till 3139, there is no resistance whatsoever. Okay. So from here, going till 3139, that's like a 10% rally. I think it's going to do that next week. It shouldn't be happening this week. However, I would not be surprised if it happened this week. The reason I'm saying it's not going to happen this week is because this weekly candle is already looking pretty damn solid. That is a very, very strong push. It could keep pushing going into the weekend. So if you do want to take a long position here on Ethereum, your stop loss should be below here, this particular low at 2700. Like below 2700 is going to be your stop loss, or more so than that, it can be below 2671. Basically this thrust candle over here, and it should be good to go going into next week, where there is no resistance in this downturn over here, which is one of the reasons I was targeting 3200, where the moment you flip this resistance, it's easy sailing still 31, 39. I'm personally not longing Ethereum, by the way. I'm just saying that if you're feeling the itch, that if it is like, trending at the moment and you want to position for it, that would be the long setup to take. I'm personally long on Bitcoin, and I will keep holding that position until it hits target. There's a very specific pattern in play on Bitcoin, which you could actually put more capital behind it if you want, and ride it up to all-time highs, which is 112K. So from here till all-time highs, that's another 2.5%. We have already captured roughly 7.5% move on Bitcoin. For another 2.5%, yeah, you could take like some more positioning in it. But one, I don't think it's going to run the inside daily candle lows. This kind of a setup is different. It's not your usual inside daily candle. It's a consolidation in an uptrend. So consolidations in an uptrend, they almost always just lead to a breakout. But let's say, for example, you take a long position over here. Where do you keep your stop loss? You don't keep it over here because it could come for like a stop run. If it does come for a stop run, you double down on your position because it's basically doing a stop run in the support zone now, which is like a prior resistance zone, but it's flipped now to be a support zone. So you don't put your stop loss down there. You're going to be putting your stop loss down here, which is the thrust candle. And if you do take a long position over here, that's where the stop loss is going to go. If by some reason the market does another stop run, you basically add more to the position. And your average entry is going to be higher than, like, if the initial entry was like at about 101,600 and you take a position over here, that average entry is going to become like 104,000. So if you go for like another stop run and you take another position, which is the third one, then your average position is going to go to like 106,000. But that's still well in line with the entire premise that the market is going to go higher. Okay. So in this case, that's kind of how I would like play the double inside daily candle, the way it's forming. I never actually see Bitcoin come down and take out the inside daily candle lows when they are forming after like a massive push like that. It has happened quite a few times where the market does that. Where like after like this giant candle, you would get like some inside daily candles, like say for example over here. The market never really came down for the lows. It just went consolidation and then bang, it just broke out. So that's something which signals to me that, you know, when there is double inside daily candle forming in an uptrend, it is almost always just consolidation which is looking to break out. I'm trying to find some example in the past where I might have come across that. I guess this one, where you were expanding quite heavily and then the market printed double inside daily candle or triple inside daily candle. Now it may look like, you know, you took just a tiny bit of sliver from this inside daily candles though, but it didn't quite go for the major lows, right? It went for it after. You first had this massive breakout, and that's the breakout I'm saying that, you know, Bitcoin is going to do first before it manages to come down in the future after taking all-time highs. So we will be making an attack on all-time highs first before any kind of pullback is going to be done to the downside. Like, you're going to run up first, make an all-time high push. That's where we close everything. And from there, the market can do a pullback if it wants to do it. Okay. So similarly on NASDAQ, our long positions are still intact from last week. The 2-week candle hasn't quite started expanding yet. We're basically very close to all-time highs now. It's like within striking distance. It's 1.25%. Market can do that in like one day. Like, you get like that trade deal announcement from China. What's 1% for the market on that announcement? So it will it will most definitely be doing that. The other thing which I wanted to mention with CPI is that Euro USD is breaking out at the moment based on that. So the key pattern which we had in play, which is this inside monthly candle, it's going for this upper end of the liquidity. Now, when you get there, that's where you need to be looking for some kind of a short trigger in the market, where the liquidity pool is like very obvious, it's sitting there. And if you make a daily SFP against that, that would be a short trigger to enter in the market. But beyond that, if you wanted to, like, you know, just keep so in the past, see that level I drew? This was an inefficiency over here, which the market filled, and it's coming down. Now, the thing is that this is the major resistance zone. This one specifically. So if the market is rushing into this area, that is probably where the market needs to top out going into next week, or maybe even this week. But I need like a proper trigger to short. I'm not gonna like blind short on this one because it's very very strong at the moment. I don't want to come in its way until like there is a proper short trigger, because the CPI is at the moment providing a bullish reaction. We are up 71 pips on that. Now, unless we reverse the entire move tomorrow and we go down, then I will be more interested in that. But at the moment, it doesn't feel like it's gonna do that. Like the way market is developing, it's almost obvious that it's gonna run the liquidity at 1.15729. So I'll be paying attention to that once it does that. Another thing which I was very interested to see is that USD JPY did not dump when Euro USD is going higher, because they both have like an inverse relationship. And we have an inside monthly candle in this as well, so we haven't even gone for the lows of the most recent inside monthly candle, let alone go for the extreme one. So this is also like indicative of the fact that indices are very strong. That if USD JPY is now going down and it's behaving bullishly, it's because US indices are just doing well, that they want to keep pushing higher. Okay. Or even Japanese stock index, which just Nikkei, is going to keep going higher. Today was an interesting day in Apple where I had this inside daily candle mapped out. And we are actually going for the lows. I don't think this is a stopper. This is not a proper stopper. It's just like a little bit of a wick above it, and it just like went down. This is a proper stopper where it took out the lows. Now these lows which are being taken out, they are being done at a very, very key SR level. Now it may not look obvious, but this SR level is over here. Hold on. So this particular swing high, that is exactly what got tapped today, and we're somewhat rejecting from it. So tomorrow would be interesting. Like, the reason I'm paying attention to Apple is because what I mentioned about the US-China trade deal. China is a very, very important player for Apple's iPhone manufacturing, and that's one of the reasons why Apple is like staying lower the way it is, because the market is kind of spooked out with whatever trade war is going on between US and China. So if there's a bullish pattern being formed on Apple like this at key SR levels, and also you will be closing the 5-day candle. So if you look at the 5-day chart, there is a double inside 5-day candle in play. Moreover, if you go further higher, there is double inside 2-week candles in play. So this 2-week candle, which is in expansion, it hasn't quite started expanding yet. We're still like trading well within the range of the previous 2-week candle. So you have double 5-day inside candle, you have double inside 2-week candle, you have double inside 3-week candle. This thing is tighter than anything I've seen in any of the asset classes ever. And this is a very major company, which is like an index mover. Like NASDAQ moves because of Apple. So if there is some kind of a trade deal which will be announced, and which is going to be specific to China, Apple will move based on that. And Apple moving based on that will make QQQ or like, NASDAQ move heavily. Where one of the reasons that NASDAQ is not going up in a strong manner, like it's just going in a very lethargic way, is because it's waiting for Apple to like kind of break out. That is like, okay, I need the major contributor to the index to like start contributing. It's not contributing at the moment. So that's one of the reasons why the market is being lethargic. Or at least in indices it is. Like crypto is fine. Okay, so that's more so like a quick update for the markets. We will meet again for our live stream on Sunday. And we will build upon the existing setups which are already going in both crypto and in US indices. Specifically in Forex, because now that we know Euro USD is going for the upside like already tapped, so we're going to be discussing that as well. All right, take care, guys. I'll see you on Sunday. Bye.